Hello, my name is Jerry Wang. I'm a 7th grader, and today I'll be presenting mutual funds. A mutual fund is an open and professionally managed investment fund that pools money from many investors to purchase securities like stocks and bonds. Key terms. Average annual total return is a percentage used when reporting the historical return of mutual funds. Market capitalization is the share number outstanding multiplied by market stock price. It indicates the company's size. Net asset value is the current fund holding market value minus the fund's liabilities or net assets. Share classes are different combinations of front-end loans, back-end loans, and distribution and service fees. Portfolio turnover is the measure of a fund securities trading volume. The history of mutual funds. In 1772 to 1773, the first investment funds were created by Abraham von Kettwich and answered to respond to a financial crisis. In the 1890s, mutual funds were introduced to the US, although they were often traded above NAV with a fixed amount of shares. In 1929 to 1940, the Great Depression hit, and there was a series of acts passed to combat it. In the 1950s, mutual funds experienced growth when confidence in the stock market returned. In the 1980s, mutual funds experienced an uninterrupted period of growth from a bull market, new product introductions, and a wider distribution of fund shares. In 2003, there was a mutual fund industry scandal involving unequal treatment of fund shareholders. How mutual funds work. First, well, it's a cycle, so it doesn't start at any one point. So investors pool their money and give it to a fund manager. The fund manager chooses which securities to invest in. The securities generate returns, which is the profit or loss, and the returns are passed down to the investors. Types of mutual funds. Open-ended funds. They are a diversified portfolio of pooled investor money. They can be issued in unlimited number of shares. The fund sponsors sells shares directly to investors and redeems them, and shares are priced daily based on their net asset value. Closed-end funds. They are a portfolio of pooled assets that raise a fixed amount of capital through an initial public offering. They list shares for trade on a stock exchange, and investors must sell their shares to another investor, not the fund itself. Unit investment trusts. They are a fixed portfolio composed of stocks and bonds. They are redeemable units to investors for a specific period of time. Unit investment trusts do not have a professional investment manager. Exchange-traded funds, or ETFs. They are a collection of securities, such as stocks, that track an underlying index. They can be invested in any number of industry sectors or use various strategies. Features, advantages, and disadvantages. Advantages: increased diversification, professionally managed portfolios, low price, daily liquidity, or consisting of or capable of ready conversion into cash, government oversight, and transparency and ease of comparison. Disadvantages: fees from active fund management and taxes, no customization, cash drag, since a mutual fund typically holds cash to make redemptions and pending investments easier. Since stocks and other underlying securities of a mutual fund usually have better long-term return than cash, holding back cash returns tends to reduce the performance and lack of liquidity, since they can only be redeemed at the end of every day. Example: Fidelity Investments Magellan Fund, or FMAGX. They are one of the most famous mutual funds in investment. Established in 1963, the fund had an investment objective of capital appreciation via investment in common stocks. As of July 2020, Fidelity Magellan has over 20 billion assets and has been managed by Sammy Siniger since February 2019. Personal opinion. I would only invest in certain mutual funds as a portion of my total investments, since most mutual funds contain high fees due to professional management. However, mutual funds are a diverse investment with a low amount of money, and certain mutual funds, like index funds, do not have a manager and the fees attached. Here are my sources. Thank you for your time. Any questions?